What's up, traders? This is the final part of the ICT top-down analysis on GBPUSD. My name is Denny Trades, Kenyan day trader, and I've been learning how to trade for the last 5 years. Welcome to the channel. So we started the top-down analysis on the monthly time frame, and we marked the previous year's highs and lows, which is this high and this low here, previous yearly high and low. Then we marked the previous monthly high and low, which is this, and we also marked the previous weekly highs and lows. Okay, and one of the most important lesson here was that price reverses around these key levels. Okay, price will reverse around the previous monthly high, which is what you can see happened here on the daily chart. Price reversed around this previous year's high, which is what you can see around this daily chart. So basically, what price moving above this previous high, we in ICT we say this is a liquidity sweep or a stop hunt. So in this case, since it's a major key level, this is a liquidity sweep, then the reversal. Okay, so again on the monthly key level, previous monthly high, you can see we had another liquidity sweep. Before any major reversal in the marketplace, there is a liquidity sweep. Okay, so this was a liquidity sweep above the previous monthly high. So for me, the buyers would be bearish on this GBPUSD. But let's see. Okay, so we continue marking our key levels. But before we go on by marking the previous day high and low, when you're marking the previous day high and low, it means you want to trade intraday, whether from the 4-hour, 1 hour, 30-minute, all the way to the 5-minute chart. Okay, but before we mark the previous day high, because that will involve the trading now or the intraday hunting for setups, we need to learn about two things. That is swing points or the fractals on the daily chart, and then we have 20 days ranges. Okay, the highest high and the lowest low in the last 20 days period. Okay, I have taught the 20 days ranges and the pricing inside the 20 days ranges before on my YouTube channel, so look up that video. And I have also taught about the daily swing points or fractals on a separate video, so also look out for that video. It will have an in-depth descriptions of the daily swing points or fractals and the 20 days ranges. Okay, and this will help you in determining the bias on the daily chart, and that will help you in when hunting for intraday setups. Okay, I've also taught on a separate video on the institutional key levels. Okay, I've taught you how to mark the institutional key levels, what are institutional key levels, okay, and why price tends to respect the institutional key levels. So this is something you're going to be doing on a weekly basis. Obviously the higher time frame or the top-down analysis you do on a weekly basis, then there are things you are going to look for on an intraday basis when looking for a trade setup, because you're not going to be doing a top-down analysis on a daily basis. But basically, these are the step-by-step of how I do it. Okay, so you're going to start by the 20 days ranges, and then the daily swing points or fractals. And a fractal is simply a 3-bar candle pattern, a V-shaped reversal. Okay, So let's start by the price action around this key, these three bar candle pattern. Okay, these three candles are marked here. This is a fractal. Why is it a fractal? Because it's a V-shaped. It's a V-shaped reversal pattern with a candle with the highest low and a candle on the left and another candle on the right with higher lows, meaning the low on this candle is higher than this low and the low on this daily candle is higher than this low. Okay, so the middle candle is the candle with the lowest low. Okay, it's the lowest low. So once it forms this three bar candle pattern, this is a reversal. This is a reversal pattern on the daily chart. Okay, so you want to be looking for when it forms this fractal here. This is a swing low. Okay, so now you want to be looking for buy trades or bullish setups. Okay, and then we have the uh, daily swing high or fractal, which also is another V-shaped. It's a V-shaped reversal pattern, and it's made up of three daily candles. Okay, so we have the candle with the highest high here, a candle with a lower high on the left, and a candle with a lower high on the right. These three bar candle pattern makes it a swing high, yeah, and this is a swing low. So when a swing high forms on the daily chart, okay, you start looking for bearish signals on the fourth candle after this three bar candle pattern is complete. Okay, and that is forming our basis for swing points of the fractals on the daily chart. And then you can see I have these vertical lines, and these vertical lines I start marking them from the first trading day of the year on the daily chart. Okay, so the first trading day of the year on the daily chart was on 2nd of January 2026. Okay, from that day we are going to count 20 trading days. Okay, so after learning about these daily swing points, that is the swing lows and the swing highs on the daily chart, all the fractals, you can call them whatever you like. The next thing is to mark the 20 days ranges, and the 20 days ranges will include the weekends. Okay, so when you take this tool here, date and price range tool, and press it on the first trading day of the year, we are going to count 20 days. Okay, we want 20 trading days from that. Okay, this is 20 trading days. As you can see, it's 20 days, 20 days, but we only have 14 bars on it. We have 14 bars instead of 20 because the 20 days includes the weekends, that is Saturdays and Sundays. So we have, out of these 20 days, we have only 14 daily candles and 6 weekends. Obviously, we don't trade or the market is not moving on weekends. Okay, so you have 6 days and 14 bars. Okay, sometimes it will be 18 days, but still 14 bars when the weekends are lower. Okay, because not all weeks of the month have four weeks. Okay, so once you count the 20 days, which is just 14 trading days or 14 daily candles, you want to put a vertical line at the end of each range, each 20-day range. Okay, so this, when hunting for opportunity, your mind is trading inside this range. Okay, price will trade above or below previous 20 days range, and that, remember, we call that bias. Okay, so you can determine bias on the monthly chart, you can determine bias on the weekly chart, and this is how to determine bias on the daily chart. Okay, so first of all, before you even we even continue, our goal is to split this price action on the daily chart into 20 days, which is 14 trading days inside that 20 days. Okay, so we'll mark that range. Okay, another 20 starts from there until we are done. So we are currently on this 20 days range, which will end on 6th August of 2026. It started on 17th of July. Okay, and like, remember what I have just said, price will trade above or below a previous 20 days range. Okay, so you can see when price started on July 17, it has not traded above the previous 20 days range, and it has not traded below the previous 20 days range. Okay, so since it traded above the previous monthly high, and this is how you join all these concepts together. Since it already traded above the uh, previous monthly high, and the weekly time frame has already shifted bearish. How do I know it has shifted bearish? Because it formed this 3-bar candle pattern. Okay, so on this week, I'm expecting some bearish price action to trade below the previous weekly low. So today is on Monday. It's our first trading day of the week. So in as much as price opened bullish, I still want to see price trade below the previous week's low. But if it fails to do that and closes bullish, this week closes bullish, then the following week our bias shifts to bullish. Okay, but for now, as long as this weekly candle has not closed above this previous weekly low, our bias on the weekly time frame is still bearish. So I'm looking for price to trade below the previous weekly low. Okay, since it has already had a liquidity sweep above the previous monthly high, so my bias on the weekly time frame shifts to bearish because it has formed this 3-bar candle pattern, V-shaped. It's a V-shaped reversal pattern. Okay, good for you to remember that. So when you go to the daily chart, you can see the previous monthly high. This here is a liquidity sweep, 3-bar candle pattern. You start looking for bearish setups from this candle open. Okay, and every day you look for bearish. That doesn't mean that every day will be a bearish candle. Of course, price doesn't move in a straight line. We will have bullish days on a market that is trending lower on the daily chart. Okay, that is nothing to worry about as long as you understand that. And now with the 20 days range, you want to remember that price will either trade above or below the previous 20 days range. So my focus is that I'm trading inside this 20 days range. Where do we want price to go? I want to see price trade above the previous 20 days range high or the previous 20 days range low. Okay, so I don't want to make my charts dirty by adding a lot of drawings, but this is what I want to see. If I am bearish, I want to see price trade below this low and also below the previous monthly low, since it already traded above and had a liquidity sweep above the previous monthly high. So one thing you want to be remembering is that price will trade above or below a previous 20 days ranges. And that is how I find buyers on the daily chart. One, using the daily swing points, the swing high and the swing low. When a swing low forms, I start looking for bullish setups. When a swing high forms, I start looking for bearish setups. Okay, so from this day, you would have been looking for bearish setups. Okay, so let's go to the start. Okay, if you mark the range, uh, the range high of the previous 20 days range, the range high and the range low. Okay, when this 20 days range is opening, it's either going to trade above the previous 20 days range high or the previous 20 days range low. But you see it opened by trading above the previous 20 days range high. This is our bias, okay? And after it traded above the previous year's high and had a liquidity sweep, you can see, like we said, price reverses around these major key levels, okay? And when it formed this daily swing point at the previous year's high, we assume that is a liquidity sweep, and we start looking for bearish trades or setups on the fourth day after this three-bar candle pattern is complete. So you can see we started looking for that bearish setups. Another 20 days range opened on this day right here on February 11th, 2026. So what you want to see is the price. If you are bearish, price will trade below previous 20 days range low. This is a range. It's a 20 days range. Okay. Since price already reacted off a higher time frame key level, which is the previous year's high, you anticipate a reversal, and the signal for reversal was this daily swing point. Okay, you start looking for shorts from the fourth day all the way there. And now for you to know whether the bearishness or bias is continuing, you look for previous 20 days range low. Okay, and that is where the market is going to go. Okay, so if you have been struggling with bias, the daily swing points or fractals and the 20 days ranges is going to help you. What I like to look at it is that there is a market, there is a price swing on the daily chart every 14 days, every 14 trading days. Okay, every 14 daily candles there is a price swing, every 14 daily candles there is a price swing. That is how I like to view it on the daily chart. And once you are able to analyze it this way on the daily chart, you can see when price is bearish, it didn't trade above the previous 20 days range high when it opened right here. Okay, so we also mark this 20 days range high and low. Okay, we have that range high, and we also have the range low. Okay, this is the highest high and this is the lowest low in these 20 days ranges. This is the highest high this is the lowest low on this 20 days range, 20 days range. Okay, so on this 20 days range, we mark the range low. Okay, we mark the range low and the range high. The range high obviously will be this candle right here. So we mark, because this high and this high are equal, we are just going to be using this trend line right here. So since this high and this high is equal, price is going to gyrate around these key levels. So you start with the daily fractals or swing points, okay? And here you can see we had our first daily swing low, okay, three-bar candle pattern. But then again, it formed a swing high, which is also a three-bar candle pattern, signaling bearish prices. But then again, you see it was invalidated when price didn't trade below this low, because this low is a protected swing. Okay, the protected swing. So when price retraced, it didn't trade below this low. Okay, and then price started going up and traded above the previous 20 days range high. Okay, again here we have this 20 days range low, and then we have this 20 days range high right. Okay, before a significant reversal, price is going to reverse on a previous range high. Okay, so as you can see, price traded above the previous, on this candle open, price traded above the previous 20 days range high. Then it failed to continue. It failed to continue up high. Okay, it failed to continue up high. So this marked the starting point of a reversal. And when it starts to reverse, our goal, once it forms that daily, three-bar daily candle pattern, we start looking for bearish signals. So this is a place where price consolidated. Obviously, if you didn't realize that price was consolidating, you will be taking losing trades around this point. But then again, you see price broke out of this consolidation and traded below the previous 20 days range low right here. And that is basically what price has been doing, trading below previous 20 days range lows and highs. Okay, you can see it didn't trade above that previous 20 days range high when it opened right here, but it traded. We had this price swing, this 14 trading days price swing. Okay, when this opened, we have had this big kind of retracement to the previous monthly high. Price traded above the previous 20 days range high when it opened right here. Okay, so you can see how I find the buyers on the daily chart. I'm trading the direction of these swing points, and my target is the previous 20 days range highs and lows. Okay, so if you want to learn more about the 20 days range highs and lows and the daily swing points or fractals, there's separate videos I've done on those price action lessons. Okay, and then since we are done on the higher time frames, our next time frame is the 4 hours. I like to skip in this time frame, but intraday, I like to look for my intraday trades around the 4-hour candle opens. Okay, so let's backtest this price swing. Okay, so remember the price already formed a daily swing point. So on this 4th trading day, we start looking for bearish setups. Okay, and my goal is to look for bearish setups now on the intraday charts. Okay, and when it's not clear, I even go to the 1 hour, 15 minute, and the 5 minute time frame. So remember, we will not be doing the top-down analysis on a daily basis. So it's just a matter of remembering that these are the key levels you are looking for from the monthly, weekly, and the daily chart. So when we go, I like to skip in this time frame, but keeping an idea that I'm looking for trading setup around the 4-hour opens. So I have to know when each 4-hour candle is opening and at what key level. Okay. So on key levels, I like to mark the 0.25 and 0.75 institutional key levels. So we're going to take this horizontal line here, this horizontal line, and you're going to start marking any 0.75 key level or 0.25 key level. So the first one will be this one, 1.3475. Okay, we don't have to be that precise. So the coordinates, we just need to be 75 or 25. Okay, so the next key level will be around 75, then 25, then 25. Where is it? Okay, this is our next key level. Okay, as you can see, price is treating these key levels as support or resistance. Remember, we buy at support and sell at resistance. You see, most of the time prices is reversing around these major key levels. Okay, we only going to for GBPUSD, I like 0.75 and 0.25 key levels. Okay, we are going to mark all the key levels inside this range since that range started. So we have the 0.25. Remember, I already determined my bias on the daily chart, and I already decided that the daily chart is bearish. Okay, the daily is bearish, the weekly is bearish. Okay, 2.5. These are my key levels right here: 0.75, 0.25, 0.75, 0.25. Okay, the 2.5, the 7.5. You can see where the 7.5, the 2.5 are on this price line. Okay, and if I'm looking for my entries around this 4-hour open, you can see there at 12 noon East African time, 12 p.m. Okay, again 12. Okay, again 12. So if you want to find high probability entries, it's around the key level, around the 4-hour open, can be looking at 12 p.m. East African time. But if you go to intraday, this is not precise because you will be assuming that you are selling the 12 a.m. because it already reacted on this resistance level of 75.75, probably using a 15 pip stop loss and targeting 45 pips stop TP. This is 3R. Okay, on the next day at around 12 a.m. at 12 p.m. noon, and then at 15 pips stop loss at 45 pips TP. Okay, you are assuming because already the bias on the daily chart is bearish, so you already know what to go looking for on intraday time frames. Okay, again you see on this candle, you'll have taken a losing trade of about 15 pips. Okay, you see, on that day you will have taken a loss, which was on Wednesday, but on Thursday at 12 p.m. East African time, you will have taken a win. Okay, remember you're looking for entries around that 4-hour open. Okay, and targeting about 45 pips. Okay, so you can see you are selling around the 0.75 key level, and your TP is close to the 0.25 key level. Okay, you are selling at 0.25 and your TP is close to the 0.75 key level. Okay, a loss on this Wednesday. TP, you entered on 0.75, TP on 0.25 key level. Okay, and today is Monday. If a setup doesn't form around right here, then we wait for price to retrace and continue bearish. Okay, same thing, you're coming on the charts to apply. The same thing happens when you are bearish. But if you look, if you like to be precise like I do, then you go to the daily, to the hourly chart. Okay, but if you go to the hourly chart, you need to be precise and you need to know what you are looking for. Okay, again, remember the swing highs and the swing lows. You want to be trading when price opens at 9 a.m. and forms an hourly swing point. You want to be trusting that hourly swing point. Okay, so price opened at 9 a.m., traded up higher, then traded lower, and formed this hourly swing point. So you start selling on the fourth candle. 15 pips stop loss is enough on GBPUSD and a 45 pips target. Okay, can see price opened at 9 a.m. lower, then higher at 10 a.m. Remember, it has not yet formed an hourly swing point. So once it formed an hourly swing point here, you can see it was at exactly 12 p.m. East African time. You enter on the fourth candle, stop loss of 15 pips and TP of 45 pips. Okay, so that's how you will be getting trades on on the hourly chart. Remember, it coincides also with the 4-hour hourly open. So you are looking for trades at the 4-hour open. You need to know when the 4-hour open, 4-hour candle is opening. Okay, so this is how you will be getting setups on GBP USD on the previous week. So we are going to be doing an every day or once in a while, every few times in a week, we're going to be analyzing GBPUSD using the same framework. We are also going to be analyzing USD card, which also my favorite pair, but intraday, I'm going to be trading gold. Okay, so I'll be trading also gold. These are my 3 main pairs, okay, on my watch list. And then you can see the other pairs here on my watch list. So that's all for today. We are going to stop there, but you have seen for the everything I'll be doing on YouTube, analyzing GBPUSD or USD card. This is the logic I'm going to be using. Okay, easy, busy. So thanks for watching. See you in the next one. Trade safe.